nothing terribly surprising in there, with the exception maybe of something more explicit on interest on reserves, which I think would be good in a couple of ways. I think if they were to lower that, it would free up some of this velocity, bring out some lending that has been stalled in the banking system. At the same time, it would reinforce this notion that they're not going to raise the Fed funds rate anytime soon. And that may be one of the ways to anchor Fed funds or concerns about those increasing and prevent the kind of riot that we saw last summer, not to mention the fact that they'll be firmer on that forward guidance. So if anything, I saw it as at least a mildly positive statement, but we know there's a lot of itchy trigger fingers in the market right now.
You know, it's interesting, Mandy, because even though the market is well aware that this is not an if, but a when the Fed tapers, every time we even suggest it or anyone suggests it, we see sellers come out. So what I just said to Bob Pisani. But then there's the buy on the dips who come right after that.
Sure, absolutely. And I think what we're seeing here is there's something that's quite ironic, to be honest, and that is you've got a Fed that obviously wants to be very communicative and try and get out there and be very clear to the markets about its intentions. But at the same time, this new transparent Fed is becoming very confusing. There are just so many Fed speakers out there, so many different and conflicting voices, doves, hawks, you name it. Everybody is out there so-called communicating that I think we end up being a little bit confused. And you certainly saw that when the minutes came out during my show earlier on today, you know, street signs. There wasn't anything particularly new that we learned here, and yet the market still sold off. And Steve Leithan was there, and he was saying, you know, yes, this is confusing. I don't know what some of your guests think about this, but it makes it very hard to read exactly what a market player should do.
So, Nathan, how do you allocate capital post the minutes here, knowing that, you know, they're looking at the next couple of months?
Well, if it happened in the next couple of months, and I'll get my original front two teeth back as well, Maria, if they did that in the next couple of months, you're going to see rates go. We're going to have a taper tantrum like we saw about 5 months ago, and rates are going to spike. And the Fed's going to have to figure out how to have two new mandates, in my opinion. Number one, how to stop the tapering while still having an easy money policy, and also convincing investors that interest rates aren't going to spike when they start the tapering. That's the challenge. When that happens, I think you lighten up in the United States and you start looking at the movie called Europe, which is just a mini version of what we've been living for the last 5 years. I also think you've got to continue to shorten up your bond portfolio duration. I like FLOT, F-L-O-T for that. It's a great way. Interest rates go up, you can watch your yield go right up with it without killing your value.